Okay, this week has been pretty good, but I have been taking major losses due to discipline. Been going a bit rogue, not sticking to the plan, but I've spotted it. Know where I've gone wrong, and I've adjusted it, and I've adjusted. So on Wednesday, I took a trade with SP500, also known as ES, and EU, Euro dollar. So I will show you how that did play out. It's been a bit of a messy one, but we'll go through it. So this is on a daily. This is EU. So the market reject these equal lows. So I thought, okay, cool. Once I see that, get a fib from here to there, and then analyze the swing and see if there's an opportunity on the low time frame. But also on the daily, there is an up close candle. ICD does say that the up close candle is the true support and resistance. So it's not a PDRA, but it's something to consider. So from there, went to the 4 hour, and then at this point I'm trying to see if there's any equal highs. So EH is equal highs, EL is equal lows. ICT also says that an equal high holds more weight or more of a target than a single high. So when I see the market go and return, I'm taking this as a high point, as an equal high. So this is somewhat equal, relative equal highs, to be pretty politically correct. So here I had one. The market would have pushed up, got here, probably this Ferrari gap and gone down, then it would have been an opportunity for me to go on the 15 to see what's going on. So just point, this is a 4 hour relative equal low, as you see. See, it's a relative, it's not exact. This is also a rejection block right here. Did the same thing here. If I put relative equal low here, 4 hour. From there, it's a failed swing. Then it expanded, took out this equal high, so I took out this equal high. So that was a 4 hour point of interest. completed. Remember this is on EU. So yeah, okay. So when that took place, I was like, okay, cool. Let me look into the move, see what's taking place. This is a 4 hour up close candle. So up close candle here. This one right here. So from that rejection, I'm seeing, is there a play within from here to here? Is there a play here? Is there opportunity for something to hold, for me to get in? And then this personally could have been it. It's a little something towards the 4 hour up close candle. But initially when I saw this set the precedent, I'm thinking, you know what? I don't believe it's gonna go higher. Because remember, it's still got a lot of things to do. So it has to go through here. But when it felt at this first obstacle, I'm thinking, maybe, just maybe, it might go the opposite way, because it seems like that's the narrative it's going for. So I said, you know what, let me sit on my hands for a little while. And when I saw this candle close, I'm waiting for this candle to close, within the up close candle on the 4 hour. I said, okay, cool, maybe I am correct. So when I saw that, I said to myself, okay, this has gone in from there. Let's see what these eggs can potentially do. So, seeing that, what I take note of also is if the market has expanded and has retraced to any down close candles that's below the 25% in this direction. So my first point would be here. This is where I saw the expansion. The market took out a fair value gap, worked its way in here, and then came close to this down close candle, but was in fair value gap, which was below the 25%. So if I was to go on the lower time frames, maybe I might see an entry. But because if you see at the time, UK time, this is 3 o'clock in the morning, I'm not trading at those times. So that would just be for the Asian session, but I don't trade that. So then I looked here, and then I saw you got your PD arrays, you got your order block, you got your down close candle for resistance, you got another one. We also have a relative equal low here. That was the only one within that swing. So I'm paying close attention to this point and see what happens. And then I see the market take it completely out. I was like, wow, okay, you show me your interest. And then some people might be thinking, why did I note down the fair value gap here but not here? ICT does say the biggest one is the one you focus on. Certain times it's not, but more time it's the one you focus on. So I didn't take no note of this, but I took note of this. So for the 15, the reason I didn't get involved in, say, this order block is because this right here is at 11, even here 11:30, and I do short run my my entries. So 05 3 pips would have been 02, would have been here. Could have done that, but I didn't. So what I did, I got to from here to here, the same theory. Fib retracement to the 15 minutes PD array objective. Then I went to a 5 minute. And waiting for the same thing to take place. Me, I've heard when there's a break, if you're looking for changing market or a market swap or break of structure, it should be very forceful and it should have gaps. So that's what I waited for. So I saw it had gaps. It broke this structure, that structure. It is not a relative equal low, but it took out this down close candle, meant to be resistance. This down close candle was meant to be resistance. It worked through here and then just took it all out. So I said, okay, cool. Usually I do not trade on news events day due to the fact of it could be unclear and it could just suck you in. It's got the potential to suck you in. I will only place a trade if it's very clear, and to me this was somewhat clear when you dig into the charts. But I'm seeing the 50-minute just get rejected, and I'm seeing the 4-hour get rejected. So when I saw the play of 15-minute, oh, this is a 5-minute break of structure traced. I said, okay, cool, I'm in the mix. That's what I got. Didn't get much because me personally, I did not like. I was thinking about. I saw it here. I was like, okay, cool. It's fair enough. But let's see what it does. Because what the market should do, the reason why you should have gaps on the expansion leg where you're looking to enter is for protection. So this was my one protection. My two protection was here. The order block as well as the up close candle. But then when I saw this relative equal low get whipped, I was like, okay, cool. Let's call it somewhat a day. So I took off. I have 3 positions. I took off 2, and then just left it as that. I still had 1 on the board. And I said, okay, let that one run. And then when I got a notification from Seed Trader that it hit targets, I was like, oh, okay, fair enough. As you see, it wasn't even the same time as then the news event, the FOMC. It wasn't then, but still did some work. So the reason why I made it this target, because you see relative equal lows from here. So that's why I got in from around here. Relative equal lows. Then there you go. If I did do the 15-minute entry, got in here, then I must stop it all the way up here. I would have let all my trades run. But I didn't do that. There's no point in beating yourself up because you didn't do something, or you're looking at all the money that's left on the table. There's no point looking at it. Regardless, I did a good trade. I stuck to the plan. I didn't deviate from it. I was disciplined. That's the main thing. So me doing that, it was a good trade. And everyone likes to say, just the main thing to do in trading is just to make one good trade. And to me, this was a good trade. I stuck to my plan, got out what I needed to, just to make sure that I'm protecting my capital. So everything was by the textbook. And that is EU. Now we can go to ES. ES was pretty similar. And I'll show you from the week so you can understand where it was looking. So initially, this fair value gap was a point of interest for the week. So I was aiming. Let's just draw out. So initially I was thinking the market was going to do a little number, nothing so major. So on the day, I saw the market retrace to down close candle below the 25% of this expansion leg. So took that into consideration and saw this as my point of interest. Okay, let's draw it out. Let's draw it out. Let's get rid of this furthermore. Yeah. So this is my point of interest. Then once I saw that as my point of interest, I would use all of this leg as my expansion towards the down close candle below the 25%. And I do believe that when you look at this leg on the 4 hour, you don't see no objective that was actually hit on this leg. Didn't retrace and then expand, retrace, expand. So this would be my low, and this would be this up close candle would be my first point of interest. Not a PDRA, but a point of interest. And then up here, relative equal highs, market took out the first point of interest, took that out. To me, still too early. This was last week. Yeah, so this didn't really amaze me, but still, is this a day? Yep, day up close candle. I wasn't expecting. I think this is where the kind of market got me a bit chopped up. It took me out. So expanded and didn't really see an opportunity, but there is relative equal lows, so was waiting for the market to show its hand and tell me what it would like to do. So that's where you see retracement levels like this one, because I'm trying to pre this one to see what it was looking to do, because it made relative equal low. So is it going to show me the interest to go down? And then there's one relative equal lows. There's another one. So on a 4 hour, it took this out just by a hair on its chinny chin. Just a little bit. And two candles have the potential to represent, if it was on a higher time frame, a wick. So if you see this on like a 5 minute, whatever, the higher time above it could be expressed as a wick. So when I saw that, I was like, okay, interesting. So that level don't need it. This leg is no threat, but let's see what it's going to be doing at this level. Yeah, at this relative equal lows. What's it going to do there? It did just tap it, and as you see, did a wick. And this is where you'll see my fib retracement tool. So my first point of interest on the 4 hour is the up close candle before the drop. Of course you have your order block here, but we're not going to really be paying attention to that. My first point would be this up close candle above the 25% on the 4 hour. So when the market went there beforehand, what I did is see what the market was trying to tell me. And if you pay attention with this leg, anything above the 25%, what is from the 4 hour, there is a relative equal low here. There is a key high. The reason why it's a key high because it's in the fair value, gap. So that's key. So and you can see that what the market did. Went there to some. If it was on an hour, you would see it. So it went there, but then I was actually looking to get in here because thinking, okay, it looks like it's gonna expand. And then I saw it come up to the 4 hour, then didn't show no momentum. So I was like, okay, cool. You're showing me something that could possibly happen. And then the market. Okay, let's go to the 4 hour. So when I saw this happen on the 4 hour, I was like, okay, let's focus after that point when the market did that. So my mindset is it doesn't have any interest. If you really understand it, remember that is a relative equal low. So it didn't have anywhere to hit. It didn't hit any objective on this leg. No down close candle. If you want to be that person that does mitigation blocks and all of that, can't remember the other one, then you can count that, but I don't do that. So I just saw it here, didn't do nothing. So to me, no reason to get in, so I expanded it. And that's why I drew out this down close candle. If I wanted to, okay, go on a 5 minute. Let me take a look at what's happening. So when I saw that happen, I said, okay, cool. Yeah, I like it. Looks nice. Fair enough. No relative equal highs, but okay. Fair enough. And then the reason why I changed my mind, because when I see that there was an expansion straight up, there wasn't like say an expansion above this out close candle and then retrace here and then expand, showing that it's got structure and it's looking to continue up. So I was like, oh, okay, maybe you don't want to go higher. And then when I saw that take place, so okay, fair enough. Chalk it up, not pay attention to it. And then so the 4 hour close, and then paying attention to it, paying attention to the market. Then I saw this take place. I was like, you know what? This is too good to pass up. And the reason, some people might say, oh wow, you know what? This is getting real close. Properly close. I said, yeah, it is. Very close to my stop. And I front run my orders by above the high at 4 pips. For the entry, 3 pips. Do that because it's proven I have been taken out at 3 and 2 pips as my stop. Like, I will put a 3 pip above the high. Well, in this instance, it would take me out. 2 pips, the same thing. So that's the reason why I did 4 pips. Lee has their favourite number. It's not my favourite number, but it's 4 pips. Seems to work with me. And entry, 3 pips. So when I done that, the market came very close. But then I was still paying attention to the 4 hour. Yeah, I'm still paying attention to the 4 hour. I'm thinking, first attempt, okay. This took place. I'm in a mix like at this point. So, okay. And then next candle. So, okay. But if this happened, then I would have lost the trade for 1, and I would have had no reason to try short. If the market would have just shot straight through here, no interest. But then that's on a 4 hour, yeah. Market is not pretty. But then the market came here and didn't go straight through on a daily. So it seems like the market is priming itself to go down. Possibly. I might be wrong. But then when you see the evidence on the lower time frame showing that it's having an issue to go up, then you might have a perfect setup for a short to sell. So market is not pretty right now. 4th quarter, it's not pretty. And then me knowing all of that from the higher time frames and believing that and knowing that I would like to see the market. So when I saw that, I was like, oh, okay, I see what you're doing. And it took out multiple PD arrays on this swing. Do you remember? Look at that. Actually, this is took out a relative equal low, wicked, bow, went there, and then so to some extent this would have been a key low, and then took it all out, stopped here, then came back, and then did its number. So on the day, what I thought it was going to get to what was it now? It's good just to have a blank version of the same chart, because your chart could potentially get a bit messy. Could have been, I do think it was here, just the down close candle, but that was very ambitious to think it's going to go there. So I was just looking to get out here, and then it did a number. And the way I entered, also I didn't tell you, was, but yeah, it was off of here. When the market went down, got in here, and then I got on a 5 minute on the, yeah, that's it. Got in a 5 minute on EU. So that's what happened with my week. I might not be showing you that I've lost, but I have taken many losses. I'm not enthusiastic to be showing losses, can't lie, but I have been taking losses. In certain times, I didn't realize certain things within the market. I overlooked it, then it took me out. But this time, pay attention to the equal lows, to the up and down close candles, and also fair value gaps, and where the market didn't fulfill a objective, a point of interest. That's what I paid attention to this time round. So now, next week, I don't even think there's going to be much trades for me. But you see here, it has wicked at a weekly down close candle. So then now, what I'll be looking for, what's going to take place here, Is it just going to retrace up to here and then go back down? Is it possible? Is there relative equal lows? Yeah. We mark that up right now. So this is actually my point of interest. So if I was to see the market retrace, go into here, then continue, this would be one of my exits. It could potentially go from somewhere, say here to here. And the reason why I'll pause it there or take off something is because I would like to see, is the market going to wick here, or is it going to go straight through it? But instead of waiting for it to go through it, I'm taking something off. Might take two off and then leave one running. That's what I might do. And then in the EU, there you go. This is what I was talking about. See, with the EU now, it hasn't even touched there. So what it's got is potential to do, it could just tap there and then shoot back up. Because right now, this is an equal low. Now I've shown you certain things. I don't need to have them on. No, we might leave that one on. So I like the way it hasn't actually taken this out, because it's going to see it as, I haven't fulfilled that. Let me fulfill it. And especially if the market doesn't go straight through it, think, I haven't fulfilled it. Let's go do that now. And then do what it does and goes to fulfill it. Because you remember, the market has fulfilled this objective for a day, on a day basis. But it hasn't fulfilled on a week basis. The day basis this is a rejection block. So once we see what the market is doing here, then we can later assess it. Then look on the 4 hour to see what does the market present, and do the same thing again. That is everything. That's how my week went. I do take losses. I just don't show them, but I do take losses. Adios.